Hi everyone, part two of the weekly stock market update. Like I said, if you don't want to look at me, you've got some nice interesting backdrop to look at instead. Now, as I mentioned already, Amazon part two. I do have 2 times leverage. I don't recommend it for any retail client because if they've not done their homework, they're going to get destroyed. Okay, what these exchange traded products are, and you can see a ticker symbol there. And this one I've had since January of last year when we got into Amazon and in my son's junior ISA. Now, why is it in my son's junior ISA? Well, as you know, the ISA allowance is quite limited. So if he's only allowed to put in, I think it was 12,000, 12,500 a year, and let's say I put, for argument's sake, all of it in Amazon, then it'd be the equivalent of him having 25,000 in there. So if Amazon went up 10%, he'd have 10% on 25,000, which is 2,500, which is the equivalent of 20% on the 12,500 allowance. Anyway, 2 times leverage, 2 times returns, 2 times drops. So don't do it yourself. Okay, I'm sophisticated, although you might not think so, but I am as an investor. Now, that's what I'm expecting with this, so I'm happy. However, as I've always warned, whenever you buy any instrument, whatever it is, always look at historic drawdowns, peak to trough, and durations to break even, and assume as soon as you buy it, you're going to get a repeat. So you're going to get a repeat of that kind of drop, and you're going to get it for that kind of duration. Okay, and if you don't like the look of that, you don't like being down, whatever that is, that might be 20% for all I know, for 4 months, then don't get the instrument because you don't like the roller coaster ride. As one of my students put it, everybody wants a Ferrari because it gets them faster from A to B, or for whatever reason, but the drive is uncomfortable and can be quite bumpy as well. I love it. Ian, shout out to you. Thank you for that. Okay, so you should know about that. Well, hey, yeah. So that's been one of the best ones, has Amazon. For me, Apple, there you go. Alphabet also, just so you know, still continue to hold both in my wife's SIP and my son's junior ISA, and that is 2 times leverage as well. For them, they've got the underlying, I've got the underlying, but the point with this one is it's been a bit of a party as well, and that gradient rises. Now, same problem with risk. Do not do it. I can take this kind of risk. You can't. That's the drawdown depth, and that's the duration where you've got a 0% return. So expect a 6-month 0% return where you are down, 6,000 to 4,000? You're down 33% for 6 months. You're going to cry buckets to me. Okay, I can take that. You shouldn't. I'm just telling you the positions that I've got. These are the top 10 S&P 500 stocks over the past month. Let's have a look at them and see if any of them are good for us. Now, as part of a reason I do this, as you know, I have a very structured approach where I go through value, growth, income, cash flow, Sortino, alpha of these companies and their momentum. Okay, but let's make sure that within that approach, as we caught Nvidia and we caught Meta, let's make sure we keep getting these, right? And one way to do it is, well, what are you going to focus on? You look at 10,000 stocks, you narrow them down, of course, but what if, you're having a bad day, you miss something? So we approach it from multiple angles. One is the massive database, and secondly, let's look at the best performers of the past month and see if we did indeed miss anything. This is for my investment program once only, so is that one. This one I would not do. So it does tick a lot of my boxes: value, growth, income, cash flow. Momentum looks okay, but look at that historically. It's a bloody mess. So I don't want to do it, right? United Airlines, basically. Biotechnique, that is a mess to read the data. So whilst this looks fine and this is what the banks say, sorry, the data's just too messy, can't read it, won't interpret it. If in doubt, leave it out. Now, again, great one. An 8, why do we not have this? Despite all of these banks having all of these, why am I not doing that as one of my picks? Well, it's overbought. And 4 times out of 5, that drops off, this pulls back a bit. Okay, so today I wouldn't, if I had a time machine and go back there, looks a bit better, doesn't it? Even though it's overbought there. 1 times out of 5, it'll continue going up like an Nvidia. 1 times out of 5 are not good odds for me. So sorry, no, I'm afraid. I know it's painful. I wish I'd got it earlier. It may well continue higher, but sorry, not for me at the moment. If it does have one of those pullbacks and then starts rising, then we might well get back into it, but not for the moment. Moderna is one of those sort of back to front almost. If you already hold it, remember the rules. If you already hold it, you hold it for 12 months or a 25% drop from either the high since you bought it or from your entry, or here's a slight sophistication on it. If historically on a rise like this, it has dropped typically not 25 from peak to trough and then gone up say 30, then you might increase that to a 30% one if you like the ride. Now, that looks okay. However, it's not a value growth income. 789, so I wouldn't buy it today, but if I already owned it, I'd continue holding it on my rules. Same with Teradyne, exactly the same as what I've previously said. This is Great Investments Program only, so is that one, so is this one, so is that one. Costco. Now, in the past, it's been great for us. There have been prolonged periods where there's been very little downside volatility. You could even do leverage on this on CFDs or spread bets, which I've done back in 2021. Those who followed me will know that. That's when it's rising, and this is going up. Now, what about now? Well, I'm afraid it's a bit overbought, so sorry, not for me. Do I wish I'd caught it here? I think we had mentioned it a couple of times back then, but only caught it there if value growth income was 7, 8, 9, or 10. So what if it wasn't? And what if it wasn't and the momentum was rising? Well, then I wouldn't have got in. Yeah, but Alpesh, you would have missed this game. Yeah, that's fine. I don't care how many stocks I miss. I'm trying to avoid the regret of having one which falls and I'd loosened my rules. If I kept to my rules and it rises and I've not got it, I don't care because there's plenty more fish in the sea. Put another way, I am trying to throw the bathwater out, i.e. bad companies, and I don't care how many babies, i.e. good companies, are thrown out as well, as long as what's left in the bathtub is as little bad water as possible, bad companies, and enough babies to make a portfolio. Got it? I'm not sure if that serves to help. Apple, I sold 50% of. I've not bought back into it yet. If I do, I'll let you know. It's one of my quality 5. What are the quality 5 that I keep talking about? I might put Eli Lilly in a quality 5 or Nvidia. I'm not sure yet. Quality 5 are the companies which consistently, historically, have given prolonged periods of significant gains with relatively few drawdowns to the downside. Okay, and when they've had those drawdowns, they've been easy to sidestep, as in 2022. That's what a quality 5 company essentially is. Consistent, massive returns to the upside, very little drawdowns, and when those drawdowns happen, they're easy to sidestep. So Apple, I'm 50% out of for reasons previously explained. That's Great Investments Program only. So is that. Meta, I've told you a million times, you know what to do with it. I don't need to repeat myself. If it drops X% from the high, you'd sell Y. X might be 25% for you, might be 10, might be 5, where you sell 50%, 75. That's the easiest way to do it. Why? Because it's maths and it doesn't rely on narrative. Okay, simple as that. What do I think is going to happen? Well, I kept saying to you, it's overbought, but it keeps rising. So in a way, I almost don't care. Look at YouTube, and there you will find many conversations I have about why IFAs and pension funds are wrecking your pension. You might want to do it yourself. And this week, Sunday Times did a story about that. Bank of America, whilst those look attractive, and I know the analysts like it, it doesn't meet my value growth income, so it's not one I would do. Netflix, I don't own, as you know, but we covered it since this period. I don't own it, so there you go. One of many which I don't own and has done well, gone up 8, but it's overbought, remains overbought. If you're in it because you were listening to my broadcast, then don't forget, if it drops X, sell Y, just like with Nvidia and with Meta. Walmart not here, Coke not here. JP Morgan I continue owning. Would I buy it now? No, because that's overbought. What are my exit rules? 12 months or 25% drop, or if I get risk averse, maybe a bit sooner, but at the moment, continue holding. Would you buy it now because it's got 7 on a VGI? No, because it's overbought. Simple, 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 simple. Tesla, as you know, another one, which was a special situation from January to October of last year until then. Then we got out of it and it's continued falling, and it's not going to be a special situation today. MasterCard exited, 12 months were up, and that's all I can tell you. It's overbought. We'll get into it today. Procter & Gamble is there. Nvidia, same as Meta. If it drops X, sell Y. Berkshire Hathaway, overbought. Doesn't hit value growth income anyway. Sorry, Warren. I'm sure he's not that bothered. Eli Lilly, Broadcom, Walt Disney continue holding. It's not been 12 months. Is that a baby bear? Well, the MACD's rising flat, so it's a baby, might become a mama bear, where you might ease off some of the position, but it's not a daddy bear because the monthly MACD is not falling below its moving average. So you just continue and wait. Are these typical Alpesh? What's going on? What's going on? Well, you know full well, when it rises, it has prolonged periods of drawdowns. So do many of these stocks. The quality 5 are probably the few that don't, and they make for an easier ride. LinkedIn, top voice. Do follow me on there and have a look at my campaign for 1 million as well, please. You will find that's where I'm looking to teach 1 million people how to be better investors. I'm currently in Dubai, for those wondering. My sister lives next door, my uncle's aunts, everybody's over here. I've got a best friend's wife's birthday that I'm about to go to, some business meetings, and I'm meeting one of the Great Investments Program clients tomorrow as well. That's nice. Thank you all very much.